You're watching SBA Today. With all the latest news, stories, and advice, here are your hosts, Paul Long and Tonya Mazurek.
Welcome to SBA Today for the week of September 23rd, where our motto is likely helpful, definitely entertaining. Tonya, what the heck are we talking about today?
Well, we're going to talk about the fact that they lowered rates. Thank God. Yes. Some small business lending stats and how Paul and I do it at our shops. And also we're going to introduce a new feature on SBA Today's show called What Would You Do? So that's what's going to come down the line. But first, Paul, as we always do, we do a story. And this week it's mine. And like I said, even on my LinkedIn yesterday, I had no clue what I was going to talk about today, but that is pretty dadgum typical of me doing these shows. When it comes to preparedness of this, Paul is our prepared guy. I am the let's wing it. Yeah, fly by the seat of my pants kind of a gal. But in other things, I'm very prepared. And so that's what I wanted to talk about today for the story. One, went on a hike last week with my team, and there's three of us that went. One shows up early, gets there early, waiting around for the other two of us, right, to come. We roll in. But as the trek gets going and stuff, you see the difference in how we showed up. One shows up on time, early, in fact, whatever, but doesn't really have a lot of extra things in the pack, if you know what I mean. Whereas the other two of us show up, we're like bringing out snacks for everyone. We've got the water. We've got Band-Aids. I've got extra contacts just in case, whatever. Totally prepared in our packs. So there's like the difference, right, of showing up really unprepared in a way and showing up maybe too prepared, who can tell. But that was just one. That's the hike. Then we've got a hurricane coming down to the Gulf this weekend, unfortunately. Now my son is getting married this weekend, and my sister, my oldest sister, one of them, and her husband were coming, but they are in the Gulf. They have a big boat in Mobile Bay, and then they've got their house in Mississippi, and they're very nervous about this. Originally, it was tracking towards the Mississippi-Alabama line. Now it looks like it's tracking more towards Florida Panhandle. Hurricanes, it's Mother Nature. You don't know where the darn thing's going. What do? Do you prepare? Do you just come and think, okay, well, it's all right. It's no big deal. It's going that direction. Well, not no big deal, but you know what I mean. Yeah. Or do you actually prepare just in case? So they canceled their trip. They're not coming. It bums them out. They've been looking forward to this. But at the same time, they've got to do what they've got to do to prepare in advance for Mother Nature, just in case she shows her ugly little face there where they are. So that's being prepared. Now, this all obviously comes back to business. And the way it comes back to business is preparing in advance for things that you want to do, whether it be get a loan, whether it be sell your business, whether it be buy a business. What kinds of preparations are you doing in advance in order to do that? And Paul, I wanted to kind of just ask you a question right now. What do you see sometimes? And you brokers out there, I'd love it if you guys put some comments in or shared with us what you would like to see from your buyers and your sellers of how they can prepare in advance. I've got my own ideas and I'll share them in a sec. Paul, what do you think?
Okay, well, you put me on the spotlight.
I am.
I love seeing financial projections, even when I don't need them. That's being prepared. What are they doing in their due diligence? That's a question I ask every single business acquisition, and that tells me a lot about the person. So those are probably the two things that I would look for right off the bat.
Well, and you know what's crazy with me? I look for other things, or I would tell people to even start doing other things well in advance of even that, especially if you're going to sell a business. Mm-hmm. You got to be looking at that not a month in advance, not even really a few months in advance. The preference would be looking at that a year in advance, guys. I mean,
or more.
Or more. 2 is best. Yes. Yes. Yep. Be looking at that in advance to start getting your numbers where they need to be, to start, saving if you need to. If you're buying a business, where's your injection coming from? What do you have to offer? What's your experience? Start getting some perhaps. Anyway, so that's mine today is preparedness, kind of like you and I in this, right? And there's different things that we all are more apt to be prepared in. And there's others where we kind of roll with it. Like, I don't know how you hike. And if you're uber prepared like I am, because, safety first, I don't know if that's because I'm a mom or what. But then showing up on a show like this, I'm the winger. I wing it. I play. I have fun. I'm like, all right, if I screw up, whatever. Anyway, so there you go.
Interesting. That's a good one. Thank you for sharing.
You're so welcome.
So let's jump into our first news story. So if you are just hearing this now, where the beep have you been? They lowered rates 0.5%. So starting 10/1, because we all know quarterly adjustable, we don't care until 10/1. Rates are going down. So we got a quick little video clip here. That's right. Take them down.
The Federal Reserve today delivering a jolt to the U.S. economy, a 0.5 percentage point cut to its benchmark rate, as inflation is making progress toward the Fed's target of 2%. Fed Chair Jerome Powell today saying the economy is in good shape.
It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there.
And Powell indicated rates are likely to come down further this year and next. The Fed's campaign to rein in inflation, which hit 9.1% in June 2022, drove borrowing costs for homes, cars, and credit cards to their highest levels in decades.
Yes, as we all know, our borrowers got a swift kick in the you-know-what for a little while. So it was really nice when I got to send out an email to all my clients saying, hey, your rate is going to change on 10/1, and the responses that I got back were really good. So it'll be interesting to see what happens. So, I mean, if they're saying rates possibly come down again, maybe this year and next on behalf of every SBA lender, hell yeah. Now, however, I got to look at both sides of a story. Now, later in the video that we didn't show you, it does talk about that they're worried about unemployment numbers going up. And this is what they're trying to get ahead of. So I don't know if I'm going to be living in a tent by the end of the year. But it's something that obviously unemployment is obviously increasing. So we need to be very careful with that. And of course, our borrowers need to be really careful on that too, because we definitely have defaults increasing, which we have talked about in the past. So keep them going, at least the interest rates. So that's a good thing. So.
That is. Well, hey, that's a good one for me because as we all know, we've all been waiting for those rates to start dropping. I don't care what anybody says. I still say the feds are behind where I think they should be, but that's just me. They typically
you should push Powell out and get your butt in there.
I think that's good. Vote for Tonya. Oh, Lordy. Anyway. Well, next, Paul, let's go ahead and talk a little bit about our friends over at Lumos for helping us and supplying some information. What we're looking at here is like 2 million small businesses in 2023 were looking for financing. 2 million. It's like 60% of small businesses were requesting less than 100,000. I don't know about you. I don't know. Do you do a lot of loans under 100,000, Paul?
A lot? No. Maybe 1 or 2 a month.
Yeah.
I don't know if that's a lot or not.
I don't think we do a lot. At least I should say we don't outside of the state of Missouri as much, just because we're typically just an SBA 7A shop. Oftentimes we'll send things like that to the micro lenders that we partner with.
Sure.
That really just, to be darn straight, do a better job. It's their wheelhouse, basically. 23% of these businesses were seeking less than 25,000. 18% 25 to 50, and 19% 50,000 to 100,000. Now, 33% of small businesses requesting 100,000 to 1 million. Okay, got it. I'm more in that realm. We typically are quite honestly, above the 350 to 500. We oftentimes will let others who do, like, let's say the express lending under the 500,000, we'll let them do that, right? They can get it done quicker for the borrower. They can get it done with less paperwork. It's better for everybody. 19% sought 100,000 to 250,000. 14% sought 250,000 to 1 million, and 7% were over the 1 million mark. Anyway, so thanks to Lumos, 54,000 small businesses sought access to financing in excess of 1 million in 23. 2,100,000 small businesses sought financing less than 1 million in 2023. So pretty interesting. I don't know. How do you do it at your shop over there?
Well, yeah, I mean, we are a credit union, so we do need to do some small dollar lending, and we do that kind of in a very quicker underwriting, et cetera. But cash flow is still king, as the sign says. So we definitely want to make sure that cash flow. I know a lot of lenders that just do it based on credit score. They use the SBSS score, Redwood score, and they call it good, and that scares the crud out of me because you need to look at the cash flow. Cash flow is everything. So,
well, and what's crazy though, Paul, is the different shops depending on how they do it. Like our 7As, we're a secondary market lender, right? So we're not portfolioing. So there's a difference too, I think, in how people look at it, what they're bringing in and what they need based on reserves and all that, depending on if they're portfolioing or not portfolioing their loans.
That's true. That's true. And they are not paying us to say this, but I will say it anyway. I have an appointment today with Lumos to look over their small loan credit scoring model. So
nice.
Cough, cough. Thank you, Lumos.
Thank you, Lumos.
Remember that when you're doing pricing. So,
hey, show us some love, sponsor.
Well, hey, jumping into our last, I want to start doing here over our next several episodes of SBA Today. We're going to do What Would You Do? Now, if you have ever watched ABC News, What Would You Do? It's kind of like that. So I want to really appreciate Andrew Longcore with Acquisition Aficionado. I'm so proud of myself. I actually said aficionado correctly. They kind of got this idea on there. So we're going to be sharing that. So here's this week, we're just going to address two things. So these are common questions and common things that we hear during a business acquisition. Okay. So like, for example, we have never heard the statement, our business is different. Right. Okay. While every business is unique, most core business concepts apply to every business, regardless of the uniqueness. You have money, right? Your money's just as green, right? This is an owner communicating, well, we don't do that. And I'm hoping that by saying this, you will not ask me any more questions. That's the hope for our business is different.
Yeah, but you know what happens? Inevitably, what happens, Paul? That means that we just ask more questions. Yeah,
100%.
We're to figure this out. We just ask more questions.
What would you do? See, there you go. Yep. Shout out to my buddy Brian Harding, who's a business coach, and he always makes fun of that as well. Our business is different. Oh, you have different money than we do, and you have different books because books are different. Now, we say that kind of jokingly.
Right.
There's a little bits of nuances in every industry. However, you make money, you have expenses, you have net income, right? The second one, it's not about the money. The only reason to say this is because it's all about the money. Some owners will have higher priorities than the financial aspects of the transaction. That makes total sense. If they need to tell you money isn't their highest priority, it's probably because they don't want to admit it is how important it is to them. And I agree with that.
Across the board, right? I mean, we can do the same thing. We all say we're different. I'm a different type of lender. And I am a different type of lender, but I still have to play within the same guidelines, the same rules that every lender plays in. I just play in it differently, right? Personality wise or something, but I'm still in it. No different than this. You're still a business. there's still certain things within that business that are exactly the same across the board. So anyway.
So I mean, I think it's very interesting on those, and we'll continue to share some of these each one. Actually, I think we should change it. What would you say? Not what would you do? Sorry, my bad. But I really wanted to kind of go over these because these are things we all hear as SBA lenders. So definitely think about how you would respond to that question, or more importantly, tell us down below how you would respond to that question. Our business is different, or it's not about the money. Then if it's not about the money, then what are you doing?
Absolutely. Even tell us what makes you different if you want. And if you can sell us on it, maybe we'll bring you on, or we'll have something to say about it.
That's right.
Anyway, well, thanks, Paul, for bringing that up. That's always a fun one. And guys, if you want the news when it breaks, or just to see us right when we break, right? Join us on Tuesdays on LinkedIn and or YouTube, or any of the streaming platforms that you get your podcast on. At any time, you can catch up in the car if you want, right? Not, as Paul has said before, on the toilet. Please don't do that.
It was the shower, not the toilet.
Fine, shower. Put it in the shower. That's fine. If you're in Washington, Oregon, or Idaho, reach out to Paul Long there at Gesa Credit Union. Or if you're in Colorado, Texas, Missouri, Florida, Arizona, Tennessee, and I'm told now, maybe North Carolina. I don't know. Anyway, and reach out to myself, Tonya Mazurek, here at Midwest Regional Bank. We'd love to help you. And don't forget our other family of podcasts, the SBA professionals out there. I know you want to see us all. So that'd be the BDO show and or Art of SBA Lending. If you've got comments for us, please reach out either via our LinkedIn and or, let's go back to this because I always get it wrong, SBA Today at artofsba.com. We'll see you guys next week. Oh, you stop it. He loves me on that. He even writes, just y'all, you got to know this, right? He writes in there, Tonya, say it fast. I'm like, anyway, all right, see y'all next week.
See ya.